Hey everybody, Smart Silver Stacker here. Welcome to another Smart Silver Stacker live stream. Glad to have you today because we got some important stuff to talk about. We've had some significant price action in the precious metals markets, specifically in silver, over the past 2 days, and not to the upside. The price of silver coming under renewed pressure today as the silver price has dipped below $23. And you can see if we zoom out to the weekly chart, it's a pretty significant dip that we've had in the price of silver. It's gone from over 24 bucks, well over 24 bucks, to under $23. And, just looking at the numbers right now, down 1.43% doesn't really tell you the extent of the damage that was done to the silver price today. Earlier, we had a big spike down to almost 22.50, so pretty big drop in the price of silver. And that is an odd thing, to see the price of silver dropping as we just had the U.S. national debt surge over $32 trillion. We've seen a big uptick in the past couple of days in the U.S. national debt now that the debt ceiling has been suspended. So you'd think that that would be sending investors a clear signal that you want to be getting out of paper assets, out of the U.S. dollar, into hard assets, inflation hedges, but that's not the case because these markets continue to be obsessed with the words that are coming out of the mouths of central bankers like Jerome Powell. So this was the news today that seems to have caused this hit to the price of silver. Jerome Powell telling us that the Fed's inflation fight is not over and that he's anticipating interest rates are going to have to continue moving up for some time now. Now, after these remarks that Jerome Powell delivered, if we take a look at the CME FedWatch tool, according to the CME here, the odds of a July rate hike have now gone up to almost 80%. And it's very interesting when you look at this chart. This is the chart of what markets are anticipating will occur at the next FOMC meeting to be held in July. And as you see the odds of a hike go up, you see this big decline in the price of silver. Now, this tells us something very critical about the precious metals market, and that is that there's no real price discovery here. The only thing driving these paper silver markets is the anticipation of what the Fed is going to do next. And this is, not a new dynamic. This is a dynamic that has been in effect for some time now, but it just shows you that there's really no rational price setting mechanism in these markets, and it's all just about the Fed. That's the only thing that is driving this at this point. And I want to go into some reasons today why I think that we're being set up here for a major reversal in the price of gold and in the price of silver when a particular event occurs. So we're definitely going to get into that here in just a moment. First, a little housekeeping here for the channel. Today's video is sponsored by SD Bullion, so big thanks to them. You can check them out with the link in the description. And also, some of the other channel sponsors, Silver Botanicals, they've been a long-time sponsor. They make these amazing products with nano silver. They've got household and hygiene products, so check them out. And don't forget to use coupon code STACKER at checkout there to save 10% off your order. Now, another thing about supporting the channel, a pretty funny story actually, I've enabled memberships on the channel. So if you want to support the channel, you can be a member now. It's $2.99 a month. You get some special members only benefits. You get some badges that you can display in the comments section. And it was very funny. I put a question up on the community page asking what kind of member benefits you would like, you viewers. So if you have some thoughts, feel free to put them in the chat. And I do see a lot of people saying hello in the chat. Hello back. Thank you for tuning in. Please smash that like button, click subscribe if you haven't yet. But the funny part about this post was that the first response I got for member benefits was someone put Q&As with Tim. That's what they wanted. So I had to remind them that I was not Yankee stacking and that I was a smart silver stacker. I have to ask Yankee for permission to do Q&As with Tim, but I did think that was pretty amusing. Got some pretty funny comments in response to that. But seriously, I do want to put it out to you. If I do a membership here, we've got channel members now. If you join that, what kind of benefits would you like to see? Would you like to see members only videos, Q&As, members only posts, leave me a comment down below or in the chat if you're watching live to let me know what kind of benefits you would like for being a channel member. And I can't do Q&As with Tim, so something other than that. Now, this is the U.S. debt clock, and as you can see here, I think I mentioned yesterday in the live stream that the U.S. national debt was pushing $32 trillion. Well, I hadn't looked at it in a day or two because we actually blew through the $32 trillion level on the national debt. And this is pretty interesting because we were kind of hung up at that $31.8 trillion level for a while there as they were stuck on the whole debt ceiling thing. But now that the debt ceiling has been suspended until January 2025, until past the next election, we have just seen an absolute spike up in the national debt, and I do believe that's going to continue. In fact, I was reading some estimates that the Treasury is going to have to auction off something north of $1 trillion. I think it was $1.3 trillion by the end of 2023 to cover their expenses. So, very likely we're going to be surpassing $33 trillion this year. And a number I want to kind of focus on today is the interest on the national debt. Let's see if I can find that on the calculator. Yeah, here we go. The total interest on the debt, $605 billion. Now, I guess there's different ways you can calculate this because if we go to the latest Treasury statement, so this is the Treasury's monthly statement for May, you can see that according to them, since the beginning of fiscal year 2023, the net interest on the national debt has been $424 billion. And the deficit, by the way, $1.165 billion. So that's since October 1st. And this is through May, so that would mean the first 9 months of the fiscal year. So I guess maybe if you annualize that net interest, it gets close to $600 billion. But that is something that is going to absolutely explode over the next couple of months and the next couple of years, because a lot of that debt that we have, that $32 trillion, was taken on when the interest rates were much lower, over the past couple of years. And now every month and every year that goes by, that debt matures and it has to be rolled over to the new interest rate closer to 5%. And so that interest rate that net interest payment on the national debt is going to absolutely explode. And you can see here on the debt clock where it tells you the interest on the debt, it kind of also gives you the other largest budget items. So you got Medicare, 1.5 trillion, Social Security close to 1.3, the defense budget, 787 billion. Well, you can see that the interest on the debt is kind of catching up to those other items. And I suspect that we're going to reach a point in the relatively near future where that interest becomes the single largest item on the budget. And this is clearly an unsustainable situation, especially given the geopolitical situation where there's a lot less appetite around the world for U.S. treasuries. So, how are we going to finance all of this debt? Well, either interest rates are going to have to move up a lot, or the Fed is going to have to reverse policy, stop their quantitative tightening, begin purchasing treasuries again in a very big way, and they may have to come into the market here as the buyer of last resort. And that means that we're going to get massive inflation, and that the Fed's inflation fight is going to be completely for naught. And, I really think that that is the direction we are headed in. Now, the fact that silver is dropping on these, talking points from Powell telling us that interest rates are going to have to move much higher. Well, maybe they will for the rest of the year. I mean, it's impossible to tell when this situation is going to break, but there's certainly plenty of, looming crises which could do it. I mean, the U.S. economy is sort of like sitting underneath the sword of Damocles at this point, because guaranteed something is going to break. Now, whether that be China dumping its U.S. treasuries, I covered that in a live stream recently, how Congress has warned Janet Yellen to put a plan in place for when China does inevitably dump their $850 billion worth of U.S. Treasury holdings, close to $1 trillion if you count Hong Kong. Or is it going to be because a tactical nuclear weapon goes off in Ukraine and the global economy goes haywire? Or maybe it will just be more banking crisis here in the US. If more banks begin to fail because of these higher interest rates and the massive amount of leverage that exists inside of this economy, maybe commercial real estate begins to collapse. That's certainly a weak point in this economy that we've seen mentioned many times. I mean, even Jerome Powell acknowledged that they are watching that closely, and that he's gone from telling us that the banking system is strong and robust and well capitalized to something that the Fed has to watch on a near constant basis. So if something begins to go haywire there, the Fed will be forced to reverse policy. So the reason that Jerome Powell is telling us that the Fed is going to, continue hiking rates and continue fighting inflation, the reason that this guy is doing this is because he is trying to control market perceptions and make markets believe that that is what is coming, because he thinks that that alone is enough to control inflation. And he understands that if he comes out and tells us like, well, we're doomed, we're going to be forced to reverse policy and revert to easing, which, I think he understands that that is likely the ultimate outcome, but he's trying to kick the can down the road as far as possible. Some people talk about Jerome Powell channeling his inner Paul Volcker. Paul Volcker cranked up the federal funds rate to close to 20% back in 1979, which, by the way, is when he did that, shortly thereafter, gold and silver hit all-time highs, and if you adjust for inflation, those are highs which still haven't been taken out. So cranking up rates isn't necessarily bad for gold and silver, but also at that time, the U.S. national debt was something like $800 billion. Now we're at 32 and rapidly increasing. I mean, now the annual deficit right now is greater than the totality of the U.S. national debt when Paul Volcker cranked up rates in '79. So anybody who is under the illusion that Jerome Powell will be able to pull off what Paul Volcker did back in the '70s and the '80s is mistaken. There's no way that the Fed can hike rates high enough to get this inflation problem under control. Now, that doesn't mean they're not going to try. I think that they probably could have, possibly a couple more quarter basis point rate hikes up their sleeve. But, two things. One, it's not going to be enough to fight inflation. And two, the big thing here is that something could very well break in this economy before those rate hikes are able to be pulled off. Someone's saying, did someone dump a bunch of silver into the market? Well, not physical metal. I'm sure that nobody is out there today selling physical silver. I mean, maybe a few weak hands, but I would expect that when you see a decline in price like this, what we end up getting is net purchasing in physical metals, but paper silver is getting sold off for sure. And if you're in the mood to buy this dip, SD Bullion, by the way, it's not on their deals page, actually. That's why I want to point this out to you. But they've got these Kilo Valcambi silver bars on sale. Pretty good price. If you get a bunch of them, you get them for $7.95. So Kilo's back under $800. But even if you just get one, $814. Not a bad deal for a kilo bar of silver. And I did just get this nice shiny SD Bullion 10th anniversary round. They had that at spot special last week. So that just arrived. So it's good to see that SD Bullion shipping times are back up to speed. And also that they're still having these nice deals where you can get silver at spot occasionally. So very happy to add that to my stack. I like that SD Bullion 10th anniversary round. I've got another one, but it's gotten kind of beat up as I put it in the videos a lot and stuff. So it's nice to have a nice, shiny, kind of mint condition one. Anyway, I do love silver rounds. You guys have my kind of random generic silver round collection. I put these in a lot of videos because these are really some of my favorite pieces of silver. I like these silver trade units. I think they're pretty cool. I think that someday we may actually revert to using silver as a means of exchange, if the dollar collapses. I know a lot of people don't think that will ever happen because, I don't know, normalcy bias, I guess is what I ascribe that to. But, if you see the U.S. dollar enter a currency crisis, then precious metals are going to be where it's at, folks. And that's why I'm still accumulating. I mean, I don't know if I'm going to buy into this dip. Maybe if it dips a little further, I might get a little more powder out, but I just kind of made my purchase for the month already, but we'll see. But I do think that when you see the price drop on this kind of news, it is a good opportunity. Jeff Nelson saying in the channel that China's exports were way down. Yeah, and they're already cutting rates in China. Pretty interesting. They've got some economic issues over there. And, I've had some people comment on one of the videos I did recently about the potential of China dumping their U.S. Treasury holdings, which has been kind of in the news lately. Again, Janet Yellen was in congressional testimony and she was warned to come up with a plan with that. The thing about that is China has an authoritarian government, and so if it comes to blows with the United States, I think that they will be a lot more willing to sacrifice in the short term their people's economic well-being by doing something like dumping dollars. I mean, that's why they've been putting in social credit scores and facial recognition and this crazy authoritarian control grid over there is so that when the economic pain of World War III manifests itself, they'll be able to weather the storm. Whereas here in the West, I hope you're getting prepared because, if economic collapse comes to the United States, it'll probably be kind of a messy affair in terms of social disorder. I saw one of the major insurance agencies out there, not insurance, but actuarial groups, so the people who kind of assess risk for insurance companies, that the threat of economic disturbance and social unrest was in their top 10 potential problems for the near future. So, don't rule that out entirely. And so, you want to be doing all your preparations, but definitely on the financial side of things, as we see the national debt exceed $132 trillion. And, they've basically acknowledged that they're never going to pay that debt off without borrowing more money. I mean, what did we hear from Janet Yellen and from the president, from all these politicians, these Congress people, folks on the left especially, telling us that if we don't raise the debt ceiling or we don't suspend the debt ceiling, we won't be able to pay our debt. We're going to default. Well, I mean, that just tells our creditors that the only way they're going to get paid back is with devalued currency. And that's exactly the kind of message that will encourage foreign holders of U.S. treasuries like China and also many other nations to dump their treasury holdings. Because who wants to hold treasury holdings that are part of a Ponzi scheme? I mean, if you can't pay off this $32 trillion without borrowing trillions more dollars, what is that? That's a Ponzi scheme. That's the definition of a Ponzi scheme. And that's why I view these dips in the price of silver on the Fed jawboning the market as nothing more than a massive buying opportunity. Silver is the most undervalued asset out there at the moment, if you ask me. It's not financial advice, but that's my take on things. When you look at the price of things from 1980, I mean, gold hit an all-time high in 1980 of $850, something close to that. Now, if you inflation adjust that, it is still higher than today's price. It's something like $3,000. But just looking at nominal terms, silver was $50. So today's nominal gold price close to $2,000. I mean, it's much higher than that nominal 1980 high. But silver hit $50 in 1980, and today you can get it for what, $23 an ounce. Well, you can't actually get real silver for $23 an ounce. Obviously, there's a premium there. But for 25, 26, $27, you can get an ounce of silver. Someone's asking me, do I have an info opinion on One Gold? Nope, never heard of him actually. Never heard of him. Yeah, I got some pushback in the chat there about prices. Listen, no bullion dealer always has the lowest price. There is not a bullion dealer you can name that has the lowest price 100% of the time. It just doesn't exist because, they're always running sales and promotions. But the thing I like about SD Bullion, I mean, obviously they're a channel sponsor, but I do have some skin in the game with them. I've been shopping with them for a long time, since well before they were a channel sponsor. It's where I buy the vast majority of my bullion. I still visit a local coin shopper's, although I don't have one near me. But if I'm traveling and I visit one, I might do that. But I've always gotten a really good experience with them. I've never had them mess up an order. Again, I was shopping with them well before they were a channel sponsor, so that's why I am perfectly comfortable having them running ads on this channel. Let's see, John Brandon in the chat, they're saying, in regards to your video yesterday mentioning new home construction, we may see an uptick. The chat is fading. I'm on my phone. Yeah, listen, one of the things about the new home construction, that was the news yesterday, that kind of dinged the price of silver because people took that as strong economic news. We're in a huge deficit of housing in this country. He says we may see an uptick because people are pulling their money out of the bank and putting it into real assets. Yeah, I mean, real estate, I do think, is not the undervalued asset that silver is. Certainly, real estate has appreciated in value a lot, but a lot of it is supply and demand. We don't have enough housing in this country, and that is why the price, I mean, in addition to the massive creation of fiat currency, the massive expansion of the money supply, but there's been a lot of inflation in the price of housing, and that's because there's not enough of it out there. So even if they do have the highest housing starts in 30 years, I think that's really just a sign that people need places to live. And yeah, to John's point, they may be deciding to put their money into real estate because certainly, even if you buy an overpriced piece of real estate, I think that that is likely better than holding fiat currency over the long term. Now you got to have some fiat currency, to pay your bills, got to have an emergency fund and all that stuff. And it is possible to earn some interest now in a savings account. It's not like, the past 15 years where the best you'd get is like 0.01%. But still, the dollar is, I think, headed for disaster here. We're seeing de-dollarization move around the globe, and it's not just because of the weaponization. I mean, a lot of it is because of the profligate spending and the massive deficit spending in Washington. So de-dollarization is being driven by multiple factors. You've got the weaponization of the dollar. You've got a shift in geopolitical alliances in the Middle East. You've got, Saudi Arabia cozying up to the BRICS. They're probably going to join the BRICS here in a little over a month at that August BRICS summit. And, also the fact that just around the world, people can see the writing on the wall. I mean, when a government tells you, hey, if we can't borrow more money, we're going to default on our debts, you probably don't want to be buying more of that debt, just saying. So anyway, that's why I view today's drop in silver as just another buying opportunity. Could it go lower? Yeah, of course. I mean, undervalued assets can always become more undervalued before they move up. But I have, and it's hard to time markets, but I have a feeling. I mean, just looking at everything that's going on, I think in the relatively near future, we are going to see an event which is going to trigger a reversal of Fed policy. And that means that we're going to see a massive reversal in these precious metals because right now the Fed is doing everything it can to convince markets that they will fight inflation to the death. And when it becomes apparent to investors that that's not the case and that the Fed is ultimately going to be forced to capitulate in their fight against inflation to save this massively leveraged up economy and to prevent a massive surge in treasury yields, among other things, then I think because the Fed has jawboned the markets down, the precious metals down, the dollar up, then it's just going to mean that much more upside for the precious metals when that time comes. And again, there's plenty of events which could trigger that. I don't know what it's going to be, but I just have a feeling, and it is just a feeling. So, call it a stacker's intuition. And obviously, maybe I'm kind of biased. That in the relatively near future, we are going to see that event. I mean, it's hard to imagine this could play out much longer. But then again, from 10 years ago, it certainly was almost unfathomable that it would go this far down the rabbit hole of debt and deficits. But here we are. So things can remain irrational for a long time. But I don't know. I have a feeling that we're going to see in the relatively near future. Now, that could, that's a subjective term. I'd say anytime within the next year is quite soon. And I know that investors kind of can get impatient, stackers can get impatient. The metals have been trading sideways for a long time, but listen, the longer this base forms, the bigger the upside is going to be eventually. At least that is my take on it. And, that's why I'm stacking for the long term. I'm not, going out there and buying a leveraged bet on silver. Listen, if I knew the price of silver was going to soar within the year, what would I do? I'd go out and buy, leveraged call options on the SLV, and then when it did, I would retire, of course. But and also to the downside, sometimes I hear people who are telling me, no, silver's going to crash, there's no way it's going to move up. And to those people I say, well, okay, I mean, if you know that for sure, then please share with me the size of your leverage short position. And of course, you usually get no reply to that because people like to speculate about things and share their opinion without having any kind of skin in the game. But here, I mean, clearly I have skin in the game. I am adding to my silver positions regularly. And, again, this is not financial advice. I'm just sharing with you what I'm doing. Someone in the comments there says, yeah, it's the slowest uh, train wreck you'll ever see. Yeah, I mean, it is a slow motion train wreck, this economy, but the thing is that it's going to happen slowly for a long time, and then something's going to happen and things are going to move quick. And one thing that we've seen in the price of silver is that when silver moves very fast. It moves faster than gold. It's a very small market. There's not that much of this stuff above ground. There's something like what? I think the best estimates is that there's like 3 billion ounces of silver above ground, and that's like in any kind of usable form. That's like flatware, bullion that investors have. There's no government stockpiles, at least as far as I know. I mean, who knows? China might have some, Russia probably has some, but I don't believe there's any U.S. Stockpiles of silver anymore. So, when the price spikes up, it's not going to be like with the Strategic Petroleum Reserve where they can just release some silver. No, there's a shortage. I mean, last year, it's the biggest silver deficit on record, I believe, almost 250 million ounces. 2021 was a deficit too, and the need for this stuff is only growing. I talked recently in a video I did or a live stream about how the technology, the solar panel, solar photovoltaic technology, the new high efficiency panels, they actually use more of this stuff. So there is going to be a tremendous demand for silver moving forward. There is going to be an explosion in the number of dollars out there. And so I think it stands to reason that the dollar price of silver is just going to have to move up. And the fact that investors are ignoring that at this point, well, that is something that we need to pay attention to. And again, not financial advice, not telling you what to do, but I'm going to continue stacking as much as I can while prices are this low. And you got to buy assets when the blood is in the street if you want to get the gains. I mean, short of just, gambling and buying a huge leverage position somewhere and making a quick profit, to me, the safer bet is to buy hard assets when they're very cheap, buy unloved, undervalued assets. And those are hard to find. We saw the easy monetary policy of the past decade plus drive huge asset bubbles across the board. Stocks, especially tech stocks, but stocks across the board. I mean, just about everything but the mining stocks are still near bubble territory. I think we just had Nvidia hit an all-time high, and that's this AI phenomenon driving a new tech bubble, just another tech bubble, as there's still tons of cash sloshing around out there looking for somewhere to go. But the truth is that very little of it is making its way into the precious metals. Although, back in March when we got the financial crisis kind of kicking off, when we had Signature Bank and SVB and Silvergate and all these financial institutions failing, there was a huge influx into, physical metals because investors understand what's going on. At SD Bullion, they told me that they saw a huge influx of their big orders, like $50,000 order, $100,000 order. And that means, I think, that when this crisis really begins again, because I think they've got markets convinced that that crisis is under control now, but I don't think that's accurate. When this crisis really begins to play out, and it seems to be playing out in slow motion and in stages, but then we get these kind of punctuated moments in time where things move very quickly, then a lot of money is going to flow into the safety of physical metals. And there's just not enough of this stuff to go around for everybody to seek its protection. And, honestly, when that happens, you probably don't want to be buying. You maybe want to be lightening up your silver position a little bit. If there's a big crisis that drives a huge amount of money into the metals market, that might be a good time to, lighten up, to be selling. You want to buy when there's blood in the street and when no one cares about an asset. And then when everybody wants it, you want to be in the position to sell some. So anyway, that's why I like to buy the dip. That's why I like to dollar cost average. Leave me a comment down below to let me know what you think. Let's see, I got a question here. If we all know it will only go up with time and a company like Tesla or Apple will be using it indefinitely, seeing that they have the capital to buy the entire market, what does that mean? Yeah, so sure. Industrial demand for silver is huge. And I think that if any of these players realize that, hey, there's a shortage of this stuff, they very well could come into the market and just buy up huge swaths of it. I mean, who knows? They might buy the producers. And if they buy the miners, then that means that that silver will be directed towards their, pet industrial project. It won't be going onto the market. So all of this points towards a significant rise in the price of silver eventually. I mean, it's very, very cheap. It's probably the cheapest asset you can find. I mean, some people will say platinum. Maybe it's a little more undervalued, but I mean that, I like platinum, but the demand for it, I just don't think is going to be growing in the way that the demand for silver will be as we play out the rest of this century. I think that silver is just going to be more and more essential because we are heading towards a time of renewable energy. Now, that is government mandated at this point, but that doesn't change the fact that a lot of silver is going to get used up in that way. And silver, it's the best conductor of heat and electricity on the periodic table, so it's a very unique material for a lot of purposes, and they're discovering new uses for it all the time. So, as we continue to progress through these periods of silver deficit, if you've got 3 billion ounces above ground and every year you've got a deficit north of 200 billion ounces, well, I mean, you do the math on that, you can see that you run out of silver pretty quick, and those deficits seem to be growing. So leave me a comment down below to let me know what you think about this decline in the price of silver that we witnessed today. What do you think the Fed is going to be doing next? Have you seen the videos of people growing silver, Isaac says? I'm assuming you mean like via chemistry, where they kind of crystallize silver out of a solution. Yeah, I have seen those. Very cool. Silver's a cool material. It's a cool thing to hold in your hand. It's a cool thing in chemistry. It is a very cool thing in technology. I mean, just ask Dean DeWolf from Silver Botanicals. Really check out Silver Botanicals if you haven't yet. There's a link in the description of this video. You can use coupon code STACKER over there to get 10% off your order. They have a lot of amazing stuff. I personally use their deodorant and their mouthwash. It's powered by nano silver. It's a naturally antimicrobial, non-toxic material. So there's a lot of ways that this stuff can get used. From everything from it's in your cell phone to your electric vehicle to your deodorant. Think about that. I mean, what a versatile material. Nomad with Guitar says you can grow silver. Well, maybe you can grow a crystal of it out of solution, but you can't grow it like a plant because it is an elemental compound. So unless you have a supernova and you are doing nuclear fusion of atoms in the core of a star in a reactor, you're not going to make new silver. The silver we have here on Earth is what we have, barring deposition by meteor impacts and that sort of thing. So this stuff is rare and it's tough to pull out of the ground, and it takes something like 10 years to get a new mine on board. So I do think that the supply and demand fundamentals are going to lead to much higher silver. Anyway, I'm just rambling on about silver, which I can do all day, and I know some of you like to hear that, but stick around for the next live stream. Make sure you click that subscribe button, the bell notification icon, so you are notified when these videos go live. And a huge thank you to all of you for tuning in. I just absolutely enjoy these live streams where I get to interact with you live via the chat, and I will catch you next time. Stay safe and happy stacking, everyone. Smart Silver Stacker, out.